Good morning, everyone. Microphone check, screen check. Looks like everything's working correctly here. Yeah, good. Welcome. Hopefully everyone is able to rest up, get ready for the day ahead, all that fun stuff. As per the usual, before we jump on the left side of the screen there, make sure to read through the live trade room morning prep PDF. Very important to go through and understand everything that is inside there. I just wanted to take a second to give a quick shout out to our latest members that joined overnight and yesterday. Thank you so much for the support. I'm pumped to have you on the YouTube family or SSFTG family in some way, shape, or form. If you aren't a member of SSFTG in some way, shape, or form, or haven't joined as part of the YouTube side, check the join button below the stream to gain access before our next private webinar, get access to the Discord chat, and you get the awesome badge next to your name, of course, here on YouTube. It always looks really cool, and you can show your support that way. If you're trying to figure out what it is exactly that we're doing here every day, look no further than the Day Trading Academy. You can find that over on SSFTG. It comes packed with 19 plus hours of material loaded for you, not including the hundreds of hours live content that we've got going on here with YouTube and everything else. Please keep in mind, with that being said, the YouTube broadcast does have between a 3 and 30-second delay, depending on where you're logging in from and the connection. If you want to level up to VIP status, though, you can enjoy exclusive permanent access to our non-delayed live analysis stream via Zoom Direct meetings, as well as the monthly VIP webinars, private VIP events, one-on-one scheduling access. The list goes on, and it's always growing. So whether you're here and you're totally new, or you're a veteran over on the VIP stream, welcome. I'm glad to have you here with me today to wrap up the week. Let's take a look at some news, take a look at some charts, see what's going on for today. Don't forget to grab your morning DP levels. Those are posted for you this morning for the major 7 markets that we take a look at. Got all those covered for you. And then the news. News. Obviously, today is non-farms. Wow. What a mess. Non-farm payrolls for April was forecasted at 978,000. Came out at 266. It's just totally missed it. Unemployment rate a little bit higher, 6.1 versus the forecasted 5.8. So a little bit higher on the unemployment side as well. That is obviously meaning that today is FOMC day. FOMC day is a big day. And a lot of traders will usually come in early, get the job done, and then head off to the weekend early so they don't have to deal with it. FOMC days, non-farm payrolls, any of those big days, like those big news days, really mess with things. And a lot of traders aren't going to hang around too long, typically meaning that closer to probably even 10 when things start dying off a little bit. If we had some other news for the rest of the day, that might help things to continue, but we really don't. We just have some minor news at 9:45, 10 o'clock, U.S. Baker Hughes oil rig count. I mean, all the basic stuff. Nothing major, though. So the majority of the news is out of the way. That was earlier this morning at 8:30 with the non-farms. Looking across the board as far as what's going on here, starting off on the Nasdaq. The Nasdaq is screaming higher after the non-farms kind of kicked it back to the upside. If we're looking at the overall move, where we're starting off from, yesterday's settlement price, we bounced off of it, and now we are over 1 DP to the upside. Realistically, markets don't like going that far that fast, and we've got the open right around the corner in 25 minutes. It would make a lot of sense to see perhaps it gets stuck up here for a little while, but then a snap back more towards the open to get that drive back down to kind of fill that settlement zone. Another consideration would be if this move back, right? If this move back was a retracement that sellers were selling, where were they selling from? Of course, it would help if I had data that worked. Hang on. Nasdaq 1. I'll just use TradingView. They're delayed, but I think I should have that data by then. Let's see, 15 minute. All right. So looking at the overall movement that we've got going on here, we've got a higher low off of the base, and let's check the volume on this drop lower. Geez, where did it all start? Way up there. But on this most recent leg, back up to the top. Maybe not. Okay. Whatever reason it's being picky on me. Anyway, we've got that bottom-weighted POC, which obviously demonstrates buyers picked that thing up like it was going out of style. But as it continues back up, we don't really see any proof that the sellers are coming in. It's all decreasing volume. That's more suggestive that buyers are taking profit. So as this kind of continues, monitoring that zone of interest, when it comes back to the POC, it was actually defended and kicked back up a little bit further again. It's a pretty big clue. But by the time it came back to that area, I'm curious, was the POC different? Yeah, so the POC was actually shifted to the upside at that point in time. So a little bit of a difference in the way that they form. Now, when did they do that? They do it on the lower high? Yeah, they did it on the lower high over here. So the POC was down here, and then it shifted to the top after it hit this bear bar. Pretty straightforward what's going on. The sellers rotate back down, and they're just kind of ping-ponging it back and forth between buyer volume, seller volume, buyer volume, seller volume, and they're just bouncing it. Now, as they get back down to the lows, they attempt to break out through the base. Right? They attempt to get through the bottom, and it could not make a new low and rolled all the way back up. Realistically, a lot of those sellers were expecting that move to go down through the low. They're shorting here looking for a continuation leg in a trend. Well, that didn't happen. So a lot of those shorts will quickly realize, wait a minute, crap. I wanted this to keep going to the downside. Why? What happened? Why is it stopping here? So we've got to look at it on the other side too. We'll come back to that POC in a second, but if we're looking from top to bottom, then we've got these sellers attempting, again, if they were sellers trying to push the market down, they're trying to hold it from here, and it breaks above. We go back to the next POC, it breaks above that as well, and all the sellers realize, wait a minute, it's time to jump ship, this isn't working, and it rolls back over into the non-farms. Funny how that all kind of works out there. But the majority of the volume seems like they were kind of playing it back and forth a bit. Interestingly as well, side note, on the crypto side of things, which really helps even further solidify why I think Ripple, out of all of them, is one of the most non-crypto around. Centralized as all get out. Non-farms, Ripple's responding bullish too. Oh, you gotta love that. Are any of the other ones responding bullish? Bitcoin a little bit. It's funny to see how closely those are beginning to get correlated now, huh? I don't want to have to worry about news with crypto. That'd be a bummer. Anyway, looking for the Nasdaq side of things, it's gone a little bit far to the upside. It's deviating away. It would very likely or very realistically need just a slight bit of a pullback, something to bring it more towards that fair value, if you will. Over on the S&P, similar situation. We've got more continuation to the upside, but the big key difference here, they broke the highs. If we look at the Nasdaq is a mile and a century and a half away, right? We've got a long way to go till the Nasdaq gets back up there. But when we're looking at the S&P, it's already there. It's already made a new high. It's already continuing. So with this movement to the upside, it further solidifies that the S&P is still the strong one of the pack so far, between the S&P and the Nasdaq at least. Now, the fact that it made a new high doesn't necessarily tell us much, especially considering the fact that it hit the high and couldn't even close above it. Total rejection up there. But what we can derive from this is if this is going to be a failed move, right, because those highs aren't looking very nice, if we draw the volume across, theoretically then we should see a top-weighted POC up here, which I don't believe they've had enough time to do. Yeah, 41.7350 would be the next zone. So you can see we've got some selling volume on up, accumulation volume up into about the 73.50s, and after that, they kind of gave up so far. We're waiting for that volume bump to come up here if it's going to stay, and if it's going to go down, it's got to get back through that and continue lower. Realistically, the sellers have a lot of work to do. Even though it did fail through the top, I would much rather be a bull, given the way that this is looking. If we look at the rotation off of the lows, it is an L4, so that's applicable. That's good for a trend continuation. Once they've broken above the highs, typically that first pullback likes to be an L1 to L2, but more so in the L1 because it was a 4. A 4 usually goes to a 1, and that's where we're kind of looking at back to settlement again. So a dip back to settlement just makes a lot of sense right now. We'll see if they want to get that L1. That'll be the point of interest. Over on gold, the thing went just screaming to the upside. With this overall move higher, it's gone to, 2 DPs higher? Yeah, I mean, the likelihood that it closes up here from a probability standpoint is incredibly low. Tell that to the people who tried shorting yesterday's rally. It doesn't always work, but we are seeing some resistance coming off of the highs here, and it appears as though we're getting some pushback off of the top there. So far, I mean, I don't want to be a buyer way the heck up here. Better to wait. On crude oil, a little bit more of a pullback. Finally dipping its way back a little bit lower here. From the previous rally, from top to bottom, the volume is actually working. Hot diggity. All right, zone of interest on crude. is going to be, I'll just make the box bigger on the bottom side, but it's going to be down there at around the 63.70s, 63.60s. Big spot there. Also kind of curious how it looks while they're building on the way down. Probably a POC in the middle, I would guess, right? Yeah, 65.08. So the bulls can't continue until they get back above that at least. Very interesting as we continue down into that zone. Over on the euro has continued its monstrous rally to the upside, obviously fueled a little bit by non-farms and all the other things going on. That kicked it all the way back up to, here again, a positive 2DP. It's gone very far up. Finding some resistance at the previous swings. There's a lot of stuff going on. But the one major thing that stands out here, more so than on some of the others, when we're looking at the euro, this thing has been going up very aggressively for the majority of April. Actually, since the beginning of April, at March 31st. So the entirety of April, basically, it just went straight up until we moved into May, where it began pulling back. And from there, buyers are continuing higher. We know this formation. If we zoom out to a 60-minute chart, this is one of those aggressive L1 continuation trends, right? You've got it L1, pulls back, L1, pulls back, L1, pulls back, L1, pulls back, L1, pulls back. Doesn't even hit the L1, pulls back. Where are they going to? L2. This is This is a TUL2. It's a textbook play out of the academy. It's right there. It's as plain as day. This is why we were talking about longs on the euro at those lows. They just did it at 3 in the morning, the rotten buggers. But this is the rotation, right? This is the movement to the upside, and they have that move all the way up to the highs. If buyers were buying into that dip, they're taking profit up here. It still has upside objectives. You know, maybe they go through the top and all that fun stuff. But the short-term objective is complete. It did it on the news, but if we look at this in the nearer term, back to the 15-minute, we can see there's some pretty stiff rejection off of those highs. It might be a little bit tough to want to be too early to the party here. On Bitcoin, really nice rally to the upside overall. I mean, this kind of looks like they're trying to form a bit of a channel-ish type thing that just... It's so shallow, it won't even let me draw the line on it. There we go. The highs don't really fit yet. They might be going into a wedge. Maybe it's from here. There's still a lot of confusion as far as the structural side of things goes for Bitcoin, at least in the nearer term. It looks like a spike in channel, and that's starting to not be a channel anymore with higher highs. Sideways. Ethereum, finally, for the first time in, what was it? The 25th? Yeah. The first time since the 25th on the 15-minute chart for Ethereum, we have successfully made another new low. Woo! Now, obviously, being a little bit facetious here, this is a small inside swing. This is no confirmed swing break or anything like that. The confirmed swing break would have to be way the heck down here. So it's got miles until we break down through that. But remember, we were talking about on Ethereum in the short term, this is a BTFD. And when you're BTFDing, what better spot than swing lows? Buyers are gobbling them up just like they always have been. No surprise. Once we finally get the deeper pullback, that's where I'll have some interest. All right. Zoom back here. Starting off on the daily, looking at what's going on. This daily picture is really painting a pretty obvious clue, isn't it? Remember that zone of support at, oh, where was that again? 13, oh, right, yeah, 13,453. It's the top of that L2. It's the bottom of the wedge. It's the everything. But we ran into a little bit of congestion, and it certainly did not make it easy until they got this bull bar, at least. They came down, hit it really... I mean, it stopped it dead in its tracks, to be fair. But then the next day did nothing. Inside bear bar, went back down, kind of chopped through it. We were talking about getting a bull engulfing candle. They couldn't quite do it. But really strong bull bar. And notably, where did it close? It closed back inside the channel and back above L1. That's great, because if buyers were buying into this L1, whether they were buying at the top or the bottom, they were kind of dunked on. This one candle just slammed them all. So when they're buying into the dip, well, we got to see them go back up and allow them out at break even. And the concern was this bear bar might have been that, right? We slammed through the bottom. Could that be a break even? Like, yikes. Seeing this reversal and closing back above that level is incredibly important. Really, really nice bullish continuation. You can actually see that little juke they did right there. They came back on the wick. So, boop, gone. So we are coming into today with a very strong bullish intent. This is the same bullish intent that we were building into on yesterday's pullback. This is why. Looking for more continuation of the upside. Logical upside objectives are, I mean, it's got to be the top of the L1. That's where all of those buyers were coming in before, and they got trapped. So they're being given a chance to get out of break even. It's above it for right now. So that's good. We'll just see if they can keep this going. All-time highs are up at 14,064, I believe. 14,064, although the high closes are a little bit lower than that. Over on the 60-minute chart, looking at the 60-minute on this pullback from a more deeper sense, at least, we've got that larger pullback to the L2. Really aggressive bull trend to the upside, rinse and repeat, same thing. We just got done talking about that. So we've got this deeper pullback, we've got a higher low, we've got an L5 transition. It's doing everything it needs to do to hold a continuation to the upside. That's perfect. Now they just have to kind of stick the landing. If we look at the overall move to the downside, it might be cleaner to look at like the 15, but if we look at it from the top to the initial bottom, the impulse POC, while the market was crashing lower, was right there. So the majority of buyers appear as though they were trying to buy. Right? You've got accumulation volume down into that point, but they gave up pretty quick. Didn't show back up to the party for a long time. Not an ounce of happy on that move down for bulls, but they were given obviously plenty of chances to get out of break even along the way. So whether they took it or not, I don't know. The assumption here would be if they didn't, they're going to be waiting for that 905, but we've got to see, what did they do down here? Did they shift anything? Did they do anything different? Did they build more? What happened? The POC has not shifted. That's good information. So even on this higher low, the POC is in the exact same spot. We are seeing a bit of a demonstration of maybe not necessarily accumulation volume, but it's starting to grow a little bit down there. We're breaking away from it now. But as far as upside objectives go, the market's going to be gunning for around that 905. That's where longs were accumulated in long, or at least that's the assumption. And if they didn't take the opportunity to get out at break even, that's where they're going to be gunning for. So 13,905 is a major zone of interest. If this comes back down and we see a POC that shifts lower, that doesn't take it away from the bulls. That just means that it doesn't have to stop at 905 anymore. So 905 is a zone of interest, although, again, the impulse POC usually has a bit more weight, and that was more up at the 905s. Actually, I don't think it changed much, but that's the major one right there. Perfect. And then we've got the 15-minute chart. From the 15-minute perspective, this is a fairly obvious reversal from the lows, at least in the short term. We're breaking above intermediary swing highs. These do not count as confirmed swings, for those of you who are just about to ask that question. The confirmed swing, man, technically speaking, is here, which looks awful. I would rather see the confirmed swing be something a bit more obvious, like up here, but technically, it's that one right there. So as far as the trend continuation to the upside, they have broken a new swing high, and we do have a higher low and a higher high. That's what trend buyers need in order to make this a trend. That's what a trend is, right? So with this continuation to the upside and more movement higher on the 15-minute perspective, we already know it's bullish, but it's also painting a picture that the majority of the bulls likely entered in down here while it was consolidated, or even potentially yesterday, given that the entire day was a consolidation and a failed low. Wouldn't have known that at the time, but in hindsight, obviously. So with this higher low and a continuation break above the highs, a lot of shorts are very likely underwater. So we can further refine kind of what we're looking for on this continuation move. The first impulse leg to the upside, that POC was bottom weighted. We do know that they shifted the POC once they went to the next lower high. And here you can see that reversal point just a little closer up. Notice what side the market is spending the majority of its time on. It's a really good filter, just like with moving averages in the short term. Is it above it? Probably should go long then, right? At least in the short term, it's a really, really easy, simplistic filter. The support level, or in this case, the SR level, is here, but the market's spending the majority of the time above. It's probably support. Right? Now, we don't know for sure, but when they get that wedge in the breakout, it went screaming higher on non-farms. If we get a pullback, likely that's going to be a big zone of interest. Right down there. And we've got settlement there. We've got everything lining up. We've got a ways to go until we hit that, though. So 615. All charts. That would be support if it ever makes it down that low. Make it nice and thick. There we go. All right. Zooming out a little bit and looking at the bigger picture, the Asian and Euro sessions were totally stacked. We know why it broke out. It broke out on non-farms. They're trying to get this thing to roll back to the upside. It doesn't look that great, though, gotta say. We've got some problems here. In order for the buyers to take it higher, we do have the mid-weighted POC. We pull back underneath it. We've got continuation. They even rallied up to a new high. So when it pulls back, you'd expect the buyers to want to buy into that pullback. But what didn't happen? No buyers showed up. Look at it as a level of SR. The market is spending its time above it. Mostly above it, if we're categorizing from here to here. It's getting a little bit split, but mostly above it. And now we're kind of 50-50. Now it's obvious that it's spending the majority of its time underneath it. So when the market comes back, what does it do? Those buyers exit. Now, this did make a new low, so we can also gauge the next pullback from the top. So it'd be this high to this low to kind of further gauge what's happening here. And here you can see the jostling of position and why there was such a rejection at 780. In order for the buyers to take this further up, we've got to get through this. That's the brick wall right now. Short ES at 42.06, 2 points. Nice. Great job. On Ripple, although we were talking about this last night on how Ripple was a fantastic opportunity, it is screaming higher on non-farms. It pulled back a little bit in the overnight, but for the most part, nice movement higher. The thing that stands out on Ripple, and the one thing that I'm still kind of waiting for here, in terms of trying to figure out what this trade wants to do, if we look a little bit closer, they bounced off that lower side and rotated back up to where? Uh-oh, that $1.70. If Ripple's going to keep going higher, and mind you, I'm not a huge fan of Ripple as it is, but if it moves, it moves. I'm a trader. I can't help it. Ripple, if they start continuing back to the upside, which, again, longs are still long from, down in this area. When we were talking about it, it was this, for God's sake, what's happening? Yes, arrow, I see you. This green box here. So, again, it did slide a little bit lower, but now we're back above that point, and they're trying to hold it as support. So long as they stay above that, and they continue to the upside, and we can break through this, it's all systems go. But if we start breaking underneath this again, that's going to be a clue for those buyers to potentially jump ship. Right now, if this is a level of support or resistance around this previous area, the market is spending the majority of its time split 50-50. Need a bit more info. So it's looking fantastic. I mean, side note, it's looking fantastic for the Bulls. Gotta say, the Bulls really, it feels like the Bulls have really shifted this, and maybe they use non-farms to do it. I don't care. But this is a very, very nice reversal to the upside that's got significant potential. I'm looking at it in the 15-minute, but this is more designed off of a potential hourly continuation back up to the highs. That could be back up to the $2 mark, and at the highs, it's right there. Ooh, man. Very interesting here. Ripple definitely has my eyes. Full disclosure, I am already long Ripple. So there's that, but so yes, I am going to talk positively about my position. but I'll still let you guys know what's up. I think it's got some potential, and if it fails lower, then it's time to get out, This continuation lower does have a new low. We've got that new swing. POC has not shifted, still in the middle. They're trying. Got the open around the corner here. 4 minutes or so. I'm late. What was up with that spike in the Nasdaq non-farm? When the non-farm payrolls so I know, right? What a miss. POC just shift. Those non-farms were just a total thrashing. Side note, the POC just shifted to the downside. So short-term buyers, if they feel like they're not going to have time to get in, this is where they're going to immediately start buying. Because their risk is incredibly low. The probability sucks. You got to take it for what it is. The long would be around the 13,730s with the stop underneath the lows. The reward potential, though, and why a lot of traders like these moves, is because even back to the DP level, you're at like a 2-to-1. And the objective is back up to previous volume nodes, at least back up to here, which now you're at like a 3-to-1. If it goes further to the VVP, big volume bump up at the highs there, that's like a 5-to-1. So a lot of buyers will be buying down here. Big time. Just more on the swing side than anything else. And if we're narrowing into the very, very close, just looking at the scalping perspective here. Got a bottom-weighted, or a top-weighted POC up at the 755s, and they're trying to break down to a new low. And then as far as the S&P with the open right around the corner here, we're coming back down to the lows of the range. Fairly obvious that 4202 will be a zone of interest, but there are some concerns. The major concern are, the teeth of death up here. It's a little bit nerve-wracking with all those wicks. So, I mean, realistically, a lot of buyers will still be looking to buy the lows of the range, but they're going to look backward and see this giant wick and think, well, I mean, realistically, if I wanted to be a buyer, why buy in the middle? This huge engulfing candle would make a lot more sense to buy the lows and sell the highs of that instead. So for me, I like this area, and I think it's viable, but I would rather be a buyer off of the extremes trying to get down to settlement with a gap fill mentality. Makes a lot more sense down there. Might not get it, but 9:28. Got about 1.5 minutes until the open, right around the corner here. Keep in mind, as a side note, it is Friday, and that means that my daughter's home with me, so background noise, family noise, etc. A little more common today. Another new low. Oh, 13,730. Man, they weren't shy about that one, huh? One minute until the new or the open, right around the corner here. From the daily perspective, it looks incredibly bullish. Where they're actually going to get things to go, who knows? It seems like the buyers won. Right? That big move down, that massive reversal off the lows, the L2, the channel lows on the daily. I mean, everything is saying that the buyers are, in at least the short term, winning the fight. The only problem is that they won the fight on news. And that doesn't give the market a lot of time to get the volume in that it needs, right? Remember, the purpose of a market, 10 seconds until the open, is to transact volume. But if it just skips over everything, it can't do that. So it's got to kind of come back and fill in the voids. Hitting the open here. From the new high on the way down, as far as continuation goes, we've got an L3, which rolled down into an L2. Big blow off, right back to an L3. The last time they had an L3, they pulled back to an L2. They're not pulling back, though. All right. Can also go back. The way this volume works on NinjaTrader is abysmal. Just terrible. All right. On these last micro pullbacks, although they didn't stick around very long, the POC ended up being top weighted on the first and bottom weighted on the second. Yikes. That's a toughie. Very obvious L1, L1, L1 trend. Likely going to see a deeper correction, although sellers just continue to pile drive the market lower. Hey, S&P. 95.75. Let's see if we can get 97. Nice. Beautiful bounce off the lows. Quick scalper's opportunity on that bounce. Sellers still just boiling this thing through the floor. Give me a little bit of a jerk back up. We're separating away from the moving average cluster by a lot. This is obviously a very strong trend in the short term to the downside. Realistically, short-term objectives, we already know they're going to want to try to pull back towards that 615. That's the zone of support. Until we get there, sell side still makes a bit more sense. Ooh. POC in the middle. Now the POC is at the top. Would like to see if they can get a secondary move back to the upside, but continued resistance here is going to have sellers trying to push down even further. We're breaking above them. The first zone of interest is going to be in the 92s. Or just chug right back through again. That works too. Uh-oh. Oh, no. Like, where are they going to close the candle? What a terrible bear bar. Massive congestion going on here. Sellers are obviously building into their shorts. If they are short, averages are likely around 83.75. Wow, this thing is whipping around this 684. So got about a minute until the first 5 volume. Nice bear bar movement to the downside. 84 sellers are trying to hold it. Really nice continuation from the sell side. Shorts trying to get the breakdown. Beautiful scalp move to the downside. Woo! Quick little snap. Now, a lot of sellers, I was only able to get 1 on that, but a quick little snapback to around that 84 would be another zone of interest for the continued breakdown. Can they get that snap back up there? Quick little pulse, but unimpressive action so far. I'm going to reduce an exit on that. I don't like how quickly it's snapped back above that. Oh, of course. Thanks, Nasdaq. You rotten pecker. Bears will sell underneath that, but I just exited a short that I didn't like. I'm not about to re-enter one without at least a bit more proof. And that bounce on the S&P is the gift that keeps on giving. See if the sellers can come back to this area around those 84s or so. That's a monster of a bear bar back down again. The issue that I've got with this 84 area from a scalper's perspective is this is still super far down. And you can see this is doing something different than what it was before. This was a very nice downtrend. It spent very little time at the lows that it did make, right? Down, up, down, up, down, up. Down, wait a minute, down, stuck, stuck, stuck. Something's changing. Doesn't mean that bulls are winning the fight yet, but something is definitely different. And again, we know this is a major bullish zone of interest. I just wanted to go to those 615s. maybe that's a little greedy. That's 80 points away. Hey, you never know. Now, if shorts were shorting from that 84 area, this is going to be the area where they're going to start feeling like, ah, crap, it just got stuck. They might start trying to exit around that. We still have sellers dominant in the short term. Looking back at that volume from the overnight to the drive down, 630 is going to be another one. They were not shy about that volume either. Those are the spots. More continuation higher. That S&P, jeez. Wow. Big rip to the upside. Zone of interest is going to be around the 730s. That was kind of the first balance that sellers found. Huge volume chunk up at the top there at 20.5. Uh-oh. I'm curious. I'm very curious. What does this look like from top to bottom? 730s. And they're starting to break above it. It's super near term, but bulls are starting to break above areas that they need to break above if they're going to maintain bullishness. We've already seen a bottom-weighted POC. We're taking note that the market is doing something that it has not been doing before. It's changed. And now we're rallying up aggressively like this, breaking above previous zones that sellers were trying to hold. That's a very obvious problem. Top-weighted POC. $32.50. Look at the volume pouring into $32.50. They're trying to get underneath it. They have closed underneath it. Okay. Sellers are trying to win the fight here. Technically, the POC's top-weighted, and it is accumulation volume up to that point, at least starting from about here. 32.50 will be the point of interest. What I want to see, because, again, from the bigger picture, I would rather be bullish. I would like to see the 32.50 sellers fail, break a new high above 40.5, and then get a pullback to that area as a zone of support. At the moment, sellers are continuing to win. All right, we have the first 5 volume node. Let's see where that ended up being on the Nasdaq. Perfect, right at the bottom. 680. And as far as the S&P goes, that was at 99.25. All right. Sellers continuing to drive the market to the downside. As long as it stays below 32.50, they're fine. Sellers are in the green. Likely the POC that formed down here in the 680s will be the objective. It's a very sad feeling when you reach for your drink and your drink is empty. Aww. No, I think he was talking about on the Nasdaq. Down here. Sellers continuing to hold pressure underneath, but we're on top of the moving average cluster at the moment. Good movement. So far, top-weighted POC at the highs. Watch this 680 zone. I don't want to be a buyer into that first drop, though. Holy crap. This could be a break-even bounce area, which it appears as though a lot of sellers may have taken. Huge reversal to the upside. Now that we've got some proof, give me that dip for a continuation back up. I like that for a rally up to 2075. Oh, I tried to grab it below that previous bull bar. Give me that bull engulfing. There we go. First objective off. Keep going through that moving average cluster. They're getting stuck. Go, 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 go. There we go. There we go. There we go. Oh, too much. I'm out. Nice pop. Couldn't quite make it up to that 2075, but you could feel them hitting the brick wall. They'll probably make it there, but I'm not going to hang out and wait and see. It was a short-term trade. Ooh, holy crap. POC just shifted down. Uh-oh. If those were shorts, either they just added a huge amount, or if those were longs, they just got the heck out of their position. That showed up out of nowhere. That was a 500 tick candle just materialized, and the POC shifted all at the same time. It appears as though buyers may have just jumped ship for the short term. That could cause some problems back down through the 80s. If we look back at the volume on the base, on the impulse, they still have to get above 21. Yeah, look at the follow through. Sellers just tanking it now. From the larger perspective, I mean, I don't want to buy this the way that it looks. You know what I mean? Like, this looks like a twin reversal. Ugh. Is the word that I would give that. Same with gold. Same. Well, the S&P is a little better. That looks incredibly bullish. I just don't want to buy the top. Same with the euro. And all of them that reacted with non-farms are just they're tough. Small little wedge formation going on here. POC still hovering in the 708s. Oh, 700s. They just flipped it. The earlier POC still up here. They made it back down to the 680s again. Another really strong bounce, like to the tick. Starting to feel a bit like an avalanche wedge going on here, but the bottom is nowhere near refined enough. It'd have to be... There's a lot that has to happen, but at least a wedge either way, even if it doesn't break down. On the S&P, good continuation to the upside. We're going to be closing out the second candle, and that does create bullish candle gapping to the upside, which is going to be looking for upside objectives on the S&P, projecting out to 42.17 at the moment. So 42.17 is the upside objective for bulls on the S&P. They'll also be looking to pick up that snap pullback to 42.10. For scalpers, though, a little bit of an inside pullback would make sense. All right. Pullback buyers filled for the long. And scalped out. Thanks, ES. At least something's doing something. Nasdaq, I don't think it knows which way is up anymore. Blow a bubble, see which way it goes. Follow it. That's where the air is. Go Nasdaq. They're coming back to challenge that 2075 volume, and now they're cracking it. 2075 volume is breaking at the moment. They're back under it. They got a bit of a fight here. They close back under it. Did they treat it as resistance? Nice twin reversal off of it. Still really love to see that 35, 34, whatever, up there, but doesn't seem to want to grab it. S&P almost completing the candle gap objective on that jump higher. Jeez. Where's all the volatility coming from? I mean, it's FOMC day, or I'm sorry, non-farm payroll day. There's a lot of volume anyway. But I mean, I'm not seeing any crazy news or anything. The only thing that really stands out is how massive of a miss the non-farms were. I mean, like, they weren't even shooting at the right target. They were bowling in the neighboring alley. You know, like, just totally missed it. So a lot of that volume could be what we're seeing now. A lot of major money has to reposition, potentially. I don't know, but that's the only guess that I could really throw forward. What I go off of and kind of what I piggyback off of and what I'm sort of in a way proud of, I don't know why it moved. I really don't care why it moved. What I do know is that it's moving, and we can utilize that. So that's good enough for me. Like I always jokingly say, I'll trade cockroach futures. I don't care. Does it move? $20.75 still acting as resistance and trying to hold the market down, but it's been higher low the whole way since that low at 680. I've got to imagine if sellers are trying to push this down off this $20.75, they're going to be giving up sooner than later if it doesn't move. That is a fairly large breakaway move, and it's breaking above a previous high. Bulls might even try to scalp, at least, on the next pullback to 720s. Quick snap back down again. I'm going to try to get my average underneath it. More continuation back up. Nice jump back through the volume, and I'll take it off there. So I exited with a loss in the first position because volatility. That went down way faster than I wanted it to. So reduced the one just to keep risk light. And once realized that it found a little bit of a base, then re-added it again. It turned out it was about the same spot, but oh well. All right, we've got another continuation break to the upside, even more proof higher now, and they're breaking through that previous node at 3250. That's even better. Now we've got a new high. Now we've got even more proof. S&P testing major objective here. This is the candle gap objective between bar 2 and 1 and 3. Gigantic rally to the upside here on the Nasdaq. More continuation. Not really, again, much from the swing perspective. It's super choppy in here. S&P's rotating into new highs, but that's about it. All right, there we go. A little bit of volume coming in. Massive POC stepped up at the base. Buyers trying to buy a washout, maybe? They're not feeling too good about it anymore, though. It looks like they just exited. Got to see it get above that 39.75 at least. We know that sellers just got potentially whipped out, but we need more proof. I mean, I guess they kind of closed above it. Since we've hit it, the majority of the market is spending its time below that 740. That does not entice me to be a buyer. That would lead me to expect a second leg down, if anything. Oops. Back towards those 720s again. Come on, Nasdaq. One nice second push down. No? Ooh, geez. Jumped right back above that POC. There's a lot of buyers stacking up into this. We might not even get close to that. It might be, this might be it. If they could dip below the previous bull bar, I wouldn't mind necessarily trying to pick up a little bit from there, but it's too far up otherwise. And now it's a really nice bear bar. Nice little snap underneath that previous bull bar. Oh, jeez. Big continuation snap underneath the bull bar. I'm going to jump ship on that one. Snap back to those 38s, but obviously I did not position myself well enough for that. Let's see if they can get a little closer. There we go. Looking for bullish continuation back up through the first objective would be back above the volume node. We're shifting the POC higher. I'd like to see it get through like the 45s or back up to the 50s. That would be the zone of interest. There we go. Nice little pop up there. See if they can get a bit more continuation through these 40s. They're holding above the 39s. They're still trying to get it going. 39 buyers reloading. Piercing underneath. Big slide back to the downside. See where the candle closes, though. Candle closes are very important. All right, I'm going to jump ship on that last portion. It doesn't look like it wants to go, and now we're back below the volume node. It's not worth the risk. I want them to get down here. 720s. That's a really nice bull bar. They might not give us a choice. Immediately trapped into, in the sense that it triggered it and then jumped straight back down. That could be the fuel to the fire that they need to try to drive down to the 720s, or it could just merely be that final little blow-off move before they trap and continue back up. Either way. Can we get down to the 20s, please? Kinda. There we go. Beautiful jump to the downside, now back through the 20s. Big washout move through the lows. I'm going to try to get my average just a little bit further down. We're dealing with a lot of volatility still. I'm all right with that as an average for now. Upside objectives would have to be challenging back through the 28s, though. Do have a new low, so we can draw that forward. I know the volume's there, Nasdaq. Big flush back down to the base. Get my average down a little bit further. There we go. S&P putting in a bear bar off of that retest. I don't necessarily want to be a buyer underneath that bear bar. I mean, I do understand this is continuing higher and we've got good movement and all that fun stuff. First objectives off on Nasdaq on that rifle higher. I think it's got a lot more potential, though. Nice secondary continuation up. Get back up into those 739s. What a terrible bear bar. All right, I'm not going to hold on past that. Still underneath the POC cluster at 39, still having some difficulty. Whoa, that was a big chunk of volume. It didn't take the POC, but a giant chunk of volume just showed up at the 730s. Nice Picasso chart. Yeah, you like that? Never made it down to that zone of interest. That's a little, oops, that's a little further down. 630, 615. Not there yet. Now, if they can dip on the S&P below that previous bull bar, there might be something, but the next one is so close, and that bear bar off the top has me a bit nervous that they might be able to get it. I'd rather go down to 6/4. Market just kind of congesting a little bit here, having a bit of a hard time. S&P's next area of interest, 4206/4. Looking across the board here, we've got gold maybe trying to go back up again. Crude oil is challenging its POC from the bottom side, at least. Euro's trying to creep back up. What a mess. 10 o'clock, top of the hour, although there's no news. It still does tend to move the markets around at least a little bit. Just got a wedge. Not really much else going on. What a crazy move. Almost a V top into a V bottom. Sellers have a new short-term high, trying to push it lower. Retest of that target high on the S&P and a rejection back down. That might make it a bit more difficult to be a buyer underneath that first bull bar. I'm not looking to be, but that adds more context to the deeper pullback. Sellers carry it down now through the moving average cluster. We're now down through new short-term lows, although long-term lows still have a lot of work to do. And this could all still just be part of the wider, larger pullback, which again, the market's spending the majority of its time underneath. It tried going above. It didn't work, but they're challenging that area again. Possible low down here with some divergence. That's not right. Not on the slower. On the faster, maybe? Kinda. Bulls looking for a bit more continuation above these 720s. Very nice continuation back above the 720s. Challenging the 730s. Nope. Bear bar right back down again. Feeling like the Doge dog. Love that dog just smiling and watching, sitting in hands, feeling good about not donating the market. Yeah, that's good. Definitely. FOMC days, non-farm days, any big news days, those are days where you're either really heavy on the gas pedal or you're really light on the gas pedal, because it's going to be either an incredibly good day or an incredibly bad day. There usually isn't much in the middle when you're talking about these big news days like that. See if the bulls want to snap it back off that 30 as a support bounce. They're trying to get it to rotate back up again. But realistically, until we crack at least a new high, I'm going to have a hard time believing them. Geez, asking you shall receive, huh? Here it comes. Bulls continuing their momentum to the upside, trying to get above that previous high. S&P, great continuation. They just can't fail back down again. Still have another lower high on the Nasdaq. There might be some buyers at 730, but I would honestly prefer to wait for a new high, just as extra proof. And here it sits. Still stuck in this area a little bit. There we go. Trying to break another new high. They haven't broken a new high yet. They're trying. S&P showing more continuation to the upside. I don't think I'm gonna get that dip on the S&P. Cancel that one. Let's give it some time, I guess. See if we can get more info. Oh man, it's right there. There they go. Now they've broken a new high. That's the proof they needed. Insane, but yeah, it's just the volatility today is crazy. I mean, these moves are not small by any stretch of the imagination. It's almost a 0.75% move from the bottom to just where we are now. Good Lord. 400 ticks in 30 minutes, 40 minutes. Then again, I mean, the drop lower was no joke either. Crazy. Yeah, exactly. We love volatility. It's a good thing. Who buys and catches these moves? It depends on how you want to approach it. These are what I usually like to refer to as option play zones, because when you're trying to play them on like a faster time frame, the mentality that we utilize, right? Start from the big time frame, go to the next one, go to the next one, and then finally find your entry. Maybe even microscope it further. By the time you've made it to this point, I mean, realistically, they've had accumulation from so many different phases and in so many different types of buyers that there's a lot of different reasons. So you have to make what we kind of jokingly call a lot of assumptions. I have to assume that they're trading the exact same way that I am. So if they were buying it, that's why I look at volume. Because if they were buying it, then realistically their averages were hovering right around there, not at the bottom, although they did buy some. Now, who is they? People with a lot more zeros in their bank account than myself, that's for sure. I mean, they can keep buying. We're talking J.P. Morgan, Goldman Sachs, the infinite money crowd, you know. So they can buy, and as long as they're keeping their risk light. Remember, you're not talking like $100,000 account, $200,000 account, You're talking like $20 million account, $100 million account. These are no joke dollar signs, right? So when you're buying like one contract, you know how little of a percentage that is? Like, who cares? They can buy another one. Even at 10, who cares? Even at 100, I mean, it just starts making a little bit. So they're able to accumulate into these positions, and you can kind of track what's happening on their averages. And when they're getting out at break even, you'll see that. When they're utilizing it for targets, you'll see that. It happens over and over again. But a lot of times, if you use the POCs as a general guide of where their average may be, it gives you an idea of where they have the majority, the epicenter of their position. It doesn't mean that they weren't buying up here and down here, but the value is in the middle. And you can see, look how much chaos this causes. So when it pulls back to that, guess what I'm looking to do? Don't be fooled by the unlimited money ideals. Something Lehman Brothers. Yeah, no joke. It definitely doesn't. It will bite you. It's incredibly dangerous. What was the one on more recently with I keep wanting to call it the wrong thing. GameStop. Unlimited money only works until it doesn't. And then you got to get bailed out by two of your hedge fund buddies. It's works great until it falls apart. Yeah, there is that too. Flashback a couple of years, huh? Can't get myself to hold for more than about 2 minutes, even if I'm in profit. It's driving me crazy. I mean, honestly, I think that's everybody's problem, and it's not necessarily a problem at the time. The problem comes in after the fact, right? When you look backward on the chart and say, oh, shoulda, coulda, woulda, right? Shoulda, coulda, woulda. You got to remember when you're exiting a trade, if you're following your trade plan at least, when you're exiting a trade early, the assumption would be that there's some new piece of information or some reason as to why you're exiting. Now, this is where you've got to be brutally honest with yourself, right? Because if there wasn't a reason and it was just, well, it was green, that's not good enough, right? There's got to be a heck of a lot more than that. So in that sense, it's no longer trading via a plan, and therefore incredibly dangerous. It's going to be a vicious cycle of make some, and then blow the account out. Make some, blow the account out. Because the losses will always get bigger, but you never let the wins grow. You almost have to You almost have to flip the mentality that you're approaching. I know. Easier said than done. I get it, right? I know. But you have to flip the mentality of, look at it like the simplistic view that we take of like, what side is it spending the majority of its time on? This is what I mean by that. Like, let a winning trade keep going. So here, right, the majority of the market is spending its time underneath it. So if shorts are short from here and it goes above their position, it's not going to freak them out. They're not going to start, jumping ship and exiting everything. But when it starts coming down, goes back up, can't go lower. Tries coming down, makes a new low, and then immediately reverses. They're probably thinking, crap, they might not have exited everything. But realistically, they've been proven wrong. So when it comes back, they're going to start liquidating out of their positions and potentially even flipping to the long if they have a reason to. You can do that a lot of ways. But the zone of interest for me at the moment, definitive hotspot between 39 and 30. I don't know if we'll get there, but no, it's the psychology of the markets. We've all been there. That's the thing. A lot of these things that we talk about day in and day out, it's happened to all of us a bajillion times. How many times have you had your stop below the low just to get taken out to see it go screaming in your favor, right? We've all been there. We know the pain. That's our shared union together as a family in trading. We all share the same pain. No, it never truly completely goes away either. Yeah, honestly, that's a really good point, Ace, that you were saying to PD, because realistically, a lot of traders, what a lot of people will do, especially, I used to do this way back in the day, where I would throw in a trade and I would leave. I'd place my stop, place a target, and because I'm the one that would mess it up, right? The trade was totally fine. There's nothing wrong with the trade. It was the using kind words. It was the person sitting in front of it that was causing the problems. So eliminate the problem, right? Leave the room. Let the trade do its thing. And after a while of doing that and kind of seeing, wait a minute, you know, I would have exited here normally, or oh, you know, I would have exited here, or that would have been a nice exit. But it ended up being a mile early, and you should have just left it go and get your target. You know, generally, especially when you're newer, that's the easier way to approach it. And I say easy very loosely. Take that word with a grain of salt. I hate that word, but for lack of better words, it's simplistic, right? You put it on, you put the stop, you put the target, and just leave it alone. So. Agreed, I lose more futzing around with a trade, making bad... Oh, yeah, for sure. I mean, realistically, if you look back at your performance, and I would say this for almost everybody, and you could go back and not even get rid of the losing trades, just get rid of the stupid trades, your performance would 180 immediately. You know? Where is everyone talking? I've got chats going on in a lot of different places right now. We've got the Discord chat, which typically people don't talk in while the room is active because they can just talk in the room. Sometimes I'll get PMs or private messages in Discord, or I'll get private messages in the Zoom meeting from VIPs. So you guys, like where you're typing in there, that's where I see, and that's the one that I check first because the Zoom meeting is VIPs. It takes precedence. On the YouTube side of things, it's got its own YouTube chat as well, which I can see, and I'm responding to all of them. That's why, and I've always had this as a habit, I repeat the question more often than not, just so people know what I'm talking about. That's why if it's a private message and you don't want me to read it, I always say, tell me it's a private message so I know first. Because I read them out loud. It's bit me in the butt a couple times, but... True story is my biggest wins are when I leave my computer. Isn't that funny? I mean, it's a human element. It goes to show you how much of a problem it can be. I don't want to cut grass yet. All right, we're rolling into 10:30. It's non-farm day. I am not interested in putting any more risk on. So as we move into training session, one thing that I like to do on Fridays is take a look at the numbers. I want to make sure, even if it was a difficult week, an up week, a down week, whatever, I don't care about the dollar signs. I want to see, did I trade it correctly? What do my numbers reflect? So let me move that down because I don't care about the dollar signs, but I do care about the numbers. There we go. So for the week, disregarding the dollars and cents and all the other BS, just making sure that we're trading it appropriately, or at least I am. We've got the... Hang on. That's what happens when I click too much. Where'd it go? There it is. So as far as the numbers go for the week, I've had 79 trades, 65.82 minus 100, so my losers 34.18% of the time times the average lose of 37, 1264.66. 65.82 times 27 minus 1264.66 is on the lower side, but again, right around that area. I usually like to see it a bit higher in the 800s, 900s, or above 1,000, preferably, just based on my historical trading at least. Your numbers will be different, I promise you. But generally speaking, that's kind of where they end up being for me. So it's on the lower side. We already knew it was a slightly more difficult week. I couldn't get runners to go to save my freaking life this week. But still trading appropriately, right? There's nothing out of whack. That's a good thing. I always want to mother hen it constantly. Oh man, I feel you. It's so hard to not overmanage a trade. It really is. That's why, the human element is such a problem sometimes when it comes to trading. I.e. the birth of algos. That's what I do. I enter a trade, go take a shower, and I come back. I'm all dry. Exactly. All right, let's do final call for questions, and then we'll wrap it up. As far as pullback zones, now more on a swing perspective, especially considering how long it's taken. A zone of interest still back in the 39s to 30s. It's a huge zone of potential support. It's just, it feels like it's never going to come back, which is usually when it does. We're kind of at that point. My concern, though, is that we're coming off of that inside swing, and they did not break the previous high very well. Tough. You can see, I mean, I tried buying into the dip, but I just couldn't get the runner to go. It's the story of the week, really. Oh, well. If you could sum up... Oh, man, now... Jeez, oh, Pete, that's a loaded one. Well, if you could sum up your trading strategy in three rules, how would you do it? Well, luckily, the way that I approach all of my trades requires 3 facets to the trade. So I guess it's a little bit easier in that sense. But if you had to break down a trading strategy into only 3 things, man... You'd really want to classify first what the market's doing. Is it in a range or a trend? It doesn't have to be a very difficult classification, but I think you have to start there. And then from there, you can break it down into 3. So there's got to be a classification first of trend or not. And then from there, you could break it down into the first thing. Obviously, we've already gone over that, but that would be the trend, no trend. And then if you're looking to, like, with a trend as an example, so I'll just keep them in the same / orientation. With a trend, trap the counter trend traders. And when there's no trend, trap breakout traders. Remember, I'm a trap trader. I like utilizing other people getting wrecked to my advantage. I know that makes me sound like a terrible person. I don't care. That's how I trade. There's nothing I can do about that. So in that type of scenario, that's what I like looking for. I like looking for people who got stuck, people who are on the wrong side of things. Sometimes the trapper becomes the trapped. Welcome to trading. But those are my preference. So that would be number 2. And then number 3, man, it would be for trends. Trends, you're usually better off with structure than volume, so I would rather go with structure. But trapped counter trend traders, you're going to find entry points much more reliably off of volume. So it would be volume traps. And that would be off of the order flow volume profile traps. And then on the other side of things, when there is no trap, when you're trying to trap the breakout traders, then you're looking more so on structural. So utilizing horizontal support, resistance, etc. That's a tough one, but if I had to break it down to 3 right this second, that would probably be the 3. Yeah, have a great weekend. Enjoy. Example of trap traders today. So the one very, very obvious one that really stood out were the sellers trying to get something going to the down move, which is what I was trying to buy into. By the time it broke and never actually pulled back. We've got the move to the upside. And again, we have to make some assumptions. If the market is moving down and volume is increasing, my assumption is that they are buyers. They are trying to buy the pullback. That makes sense to me. To me, that's common sense, right? So to me, these are buyers trying to accumulate a position down to 1373. It doesn't mean that they won't buy more down here. In fact, there's a huge volume chunk. I'm sure they did. but their average, where they are generally, is around the 730s. So if these are buyers trying to get something going, they were dunked. So when it came back, that's a sellable opportunity. It's right at the open. Timing's terrible, but that's a sellable opportunity with buyers getting out. That's a good example of trapped buyers flipping it to the opposite side. If sellers were looking to strike here, maybe they weren't short yet, or maybe they were waiting for a reason, and that was the reason. If they shorted here, then immediately they were in profit, and then double bottom, higher low, retest the break even, higher low again, retest break even, higher low again. Now they're negative. Do you think they're going to sit in it too much longer? Probably not, right? It wouldn't make a whole lot of sense if they were positive for that long. Impatience with bad trades. So when it goes down to break even, where do you think it bounced? They all jump ship. It doesn't mean that it didn't go back through it again. But a lot of that play, a lot of that back and forth all happens around that middle one because that's what they're trying to fight over. Buyers are fighting to get it to go up. Sellers are fighting to get it to go down. Sellers lost this one. So where are they going to look to come back? Get them out of break even. 730 to 740. That's the zone. Doesn't look like it's going to come back anytime soon, but that's usually when it does. So that'll be the area that I want to pay attention to. If it does dip down there, it ends up being a good buying opportunity, would you hold over the weekend? I hate holding the Nasdaq or any future over the weekend. The only time that I think I would ever hold over the weekend is if it was like a micro and I was in like 2 contracts or something, you know, like where the risk was just, even if it gapped 100 ticks against me, I'm still not out that much, you know. There's just the moves that can happen over the weekend that you cannot control, that you're just forced to deal with when the market opens. I mean, best of luck, you know, but I don't want anything to do with holding over the weekend. At least not with this fragile of a market. All-time highs, that kind of stuff. People are way too quick to jump ship when you're at all-time highs. Yeah, that's another one, Paul. Definitely. Yeah, be a big on Friday. Great job. All right. Well, I'm not seeing any other questions coming in, so that's going to do it. Like we always say, oh, no, hang on. There's one last one, and that'll be it. Thoughts about Litecoin and BCH over the weekend? Let's see here. Litecoin and Bitcoin Cash. First of all, Bcash to 1,600. What? That's insane. I mean, in a really good way, but that's crazy. I know we were talking about that yesterday, but that's just lordy. With this kind of move to the upside, my first instinct would be to look at what they did on this initial rally higher. Where did the majority of volume take place? When did it take place? On the initial leg higher, the majority of the volume took place before the breakout. Okay, if there were shorts, they got squeezed. If they were longs, they were successful. All right, fair enough. Got a really strong rally to the upside. Let's see what happens after they made the next high. No POC shift. We've got the next high right there. And now the POC has shifted higher up to, let me refine this a little bit more. There. Now, when did that POC shift? Wasn't there. Not there. Not there. Not there. There. So, they shifted there. And bulls are trying to keep it back above that price. So realistically, that would tell me that if they were shorts, they're not happy, and they're jumping ship pretty quickly when it comes back. So if I wanted to be a buyer, that would be a fair point of interest to be a buyer on in the near term at around 1350. The problem is if that breaks, because Bcash just left the station, and they never came back. So if the market is going to find a deeper zone of interest, then we might have to go back to that larger pullback zone, which unfortunately is down at 919. That's sub 1K. Two different options, but very different results. And then, so, I mean, realistically, I would like to be a buyer, but this just seems like it needs a deeper pullback. Maybe get under the 1280s. I don't even want to be a buyer up in the 1350s. I want to see a dip underneath. Get some retests like in the 1200s or something. Just better than where it is now. And as far as Litecoin goes, Litecoin rallying up into the what was the high? 374.50. Sheesh. So here again, first instinct would be the last leg to the downside. If those were buyers, they should have a middle or downweighted POC that it broke above, which it did. They broke above it and have never come back so far. So realistically, if the market does want to pull back and it's going to find a zone of interest to pull back to, what better spot than that major POC cluster down there at 260 to 265-ish in that zone? Secondary concept, if we're looking at this most recent narrower leg down. Well, can't really use that. They've already used it. I mean, you might find some bouncing off of that too, but it seems like it's already been utilized and it's already rallied up to a new high. Nearer term support 343. I would rather wait for the deeper one. So for me on crypto, it's a waiting game. Sitting on the sidelines, just seeing what it wants to do. All right, that's going to do it. Hopefully you all had a great day of trading. Hopefully you all had a great week of trading. Like we always say going into the weekend, make sure to spend some time away from the markets. I know we're all addicted. I know it's in our blood. I know might as well just tap it in like an IV. I get it. But at least take some time off. We make more decisions in a single day than most people make in a week. Mentally, we need that rest time even if physically it doesn't feel like it. So maybe go for a hike. Doesn't take a whole lot of thinking there. Unless you live in a place. They just found a dead bear down the street from me. Like, what? Was it yesterday or the day before? There was a black bear. They found it on the side of the road. Got hit by a car. Insane. So maybe, you might have to use your brain a little bit if you're going for a walk, depending on where you live. Don't get eaten by bears. But that's going to do it. Enjoy the weekend. Rest up. And we will see you all back on Monday ready to rock and roll. All right? Enjoy. And we will talk to y'all then. Thanks.